All right, guys. So I know I kind of stepped away from posting videos and stuff. I'm sorry for that. I was kind of focusing on my own trading. I also work a full-time job and I got promoted, so I've been dealing with that stuff. But anyway, I've been working on passing a funded account evaluation. And in a previous video, I said you only want to trade a static account. And so this is my, this is my static account, but I kind of left it on the back burner. I'm not actually paying this monthly fee for it. The Apex does 90% off sales all the time. But what I realized was actually there is a reason that trading a full is better, even though it has a trailing threshold. And I'll go into that, to why. I'll go into a little bit into why, and then I'll start talking about some trading strategy stuff, things I've been seeing in price action lately. So, okay. The reason why static is better is because you're building cushion right away. There's no trailing drawdown. The drawback is that their total drawdown that you start with, the drawdown limit, is very small. Because again, these things are designed for you to fail. So you have to be very good at trading in order to succeed. So the downside is that you have to trade with very small size, like 1 micro, at 1 to 2 micros at max at first. And even that you could still blow very easily, right? So you start building cushion right away. So once you have like, is this my, yeah. So this one, I'm 590 in profits, right? From where I started. So now my cushion is over $1,000 on that account. So I could start going up to like 3 micros. The thing is, this would be a great way to be making income to like a day job. Once you build up, you pass the eval, you start building up a cushion, you start making profit. It's good. And for it would take a very long time before you build the account to a size where you could be trading 20 micros at a time, taking your partials and such and such. The only issue with this is what happens when 2 years down the road, you finally built up enough account cushion that you can actually trade 20 micros inside, right? And then you're capped out, right? So then once you've got your setups and you know how to trade and all that, and you've capped out at 20 micros, and let's say you're averaging, I don't know, let's say your average literally with 20 micros, let's say you're averaging, even including losing days, winning days, all that. Let's say your average is like, maybe you win about $1,000 a day on average, or maybe let's even say 2,000. Let's say you made $2,000 a day. Okay, and there's 220 trading days in the year. That's, you're making, mid 6-figure income. That's good. This is the equivalent of like having like a high, a corporate management type position, right? You know what I mean? Like not being like, you're not an executive by any means. Executives are making like they're making 7 to 8 to 9 figures, but you're making, you're like this is like a regional manager type of salary. You know what I mean? Absolutely great. But this is where you're capped out at, right? So once you hit this max, if you're making this, you won't make any more than this, right? So again, it could take years to even get to the point of building up the account enough where you're using consistently 20 micros of leverage. And that's great. And you could totally make a living the rest of your life doing nothing but trading a 100K static account at Apex Trader Funding. Oh, also you'd have to take, 10% out of that because you only keep 90% of the profits. And they also take, I think, some fees and commissions. So maybe about 85%. So it would be less. But let's just say you're making like 400K a year. Totally livable income. Like you're making more than like over 99% of the whole world population. But what happens when you want to go bigger than that? Well, this is the biggest static account you can have, and that's for a reason, because they don't want building cushion to be easy, right? So the benefit to this is you have 170 micros. Okay, so let's just divide 170 by 20. So now let's do 8.5. So we were making 444,000 before. It was 440,000. Now you're averaging about 3.7. Like we're talking, you're making over 3.5 million a year. Big difference, right? Big difference. So again, it would take just as long to build up to the 20 micros here as here, but then you would keep building past that. And so after 10 years or so, you might be making, you're going to be making 7 figures a year, right? So that's a big difference. So we're talking in terms of long-term look ahead, that's a big, big difference. So the issue with full instead of a static is there's a trailing threshold. And how trailing threshold works is the highest amount of open P&L you go into, not just closed trades, open P&L. Once it starts moving away from you, you are instantly going into trailing drawdown. So these are designed for you to lose. Now again, I'm not paying over the $300 a month. The Apex does 90% off sales all the time. They have one going right now too. So I'm paying about like $30 to $60 a month for this, which is still, that's a decent amount of money. But the potential to be making 7 figures 10 years from now is that's pretty huge, right? So the reason that I went over to full is because I learned something about the trailing threshold, which I did not know about. And that is that even though it trails, there's very strict rules where the open P&L, as soon as it goes away from you, from your open position, you start going to trailing drawdown, as you can see. Oh wait, this is the, sorry, that's my static. This is my other one. So I was at, I had a loss today, but yesterday I had a big winner. I made over $1,000, and today I lost about 700 something. So, or actually, yeah, I think it actually ended up losing a little bit over 800. So, well, over the 2 days from like highest amount. Anyway, but so I'm already almost 20% drawdown, and I'm only trading 6 micros at a time. I tried trading 3 times that size, 4 times that size, and I was blowing my funded evals, so I had to go way down. But anyway, that was just, trial and error, learning what's acceptable risk. The thing is, once you get funded on this, $9,000 in profit, you pay in a funded, like an eval fee, you pay a one-time fee to get funded. It's like a couple $100. It's not chump change. It's pretty, it's kind of expensive. But then once you are funded, then the account resets to $150,000. This time you're trading live, quote unquote. But now this time, once you're funded on a trailing threshold, guess what? Once you get funded on Apex, there's no trailing threshold anymore. I did not know that. I went through this site and I scoured all the fine print, and somewhere in the fine print it said that. So that's important. That's highly important, because what that means is that a full, once it's funded, essentially becomes like a static, except you have way more potential leverage down the road once the account builds enough of a cushion for it, right? So this is actually preferable to this. Okay, so once you're funded, there's only $100 of trailing threshold. So the first $100 in profit you make, the trailing drawdown trails with $100. After that, and I don't know why, it's just random, right? But after you've made $100 in profit, everything after that, no more trailing drawdown, it becomes exactly like a static account. So that you see now the benefit of this. The issue is that they give you all this leverage, right? You should not trade anywhere near this leverage. You shouldn't even be trading one mini. You shouldn't even be trading one mini. I'm trading 6 micros, and I'm already, after one losing day, almost at 20% drawdown. So it's a patience waiting game. You got to trade your edge slow and steady, make a little bit of profit. So I'm about 10% of the way to being funded on this. So provided that I don't blow it. And this will be much more lucrative for me than this one. Now I'm still holding on to this one because I got it at a cheap 90% off sale, and I'm going to get funded on this too. And there is a trade copier where you can copy it across accounts, but the thing is I'm trading different size on these. So I'm not quite sure what I'm going to do with this one. I think I'll probably try to get funded on it too. And if there's a way I can copy trades but have different size with the copier, I don't know if that's true, but if that's possible. But if it is, then I'll do that. Because trading both of these is fine. Trading them simultaneously would be great. The same edge. But, who knows? Maybe I'll end up canceling this once I get funded on the other one. Anyway, not really worried about it. the real thing is that I found out that the trailing threshold sucks, but if you can manage to get to your profit goal without hitting the trailing threshold, which it's always chasing you, it's always hot on your tail. But if you can get to that profit goal, get funded, pay the fee, and start building a cushion, you're going to be way happier 5-10 years down the road when you can actually trade 170 micros of leverage, or 7. At that point you just be trading minis. But when you can actually trade, 17 minis, that's going to be huge. And then, just say eventually you cap out in profits. Guess what you'll do? You'll just go to this one, or you'll go to this one. Which again, well, you'd have to get funded. Maybe you can upgrade, but I don't know. But then you'd have to start the whole shebang again and just build and take a lot of. But at that point, you would have so much profit from this. You could just sit and spend, a year or whatever getting funded on this. Yeah, it could take that long if you really want to be safe. Spend a year getting funded on this and start doing the same thing all over again. So, maybe it'd be smartest to just start with this one. But this monthly fee, even 90% off that, is it's not because it'll be $60 a month for the first month, but then it'll be $120 a month for the second month. I'm not that's not within my budget right now, because I've got some debt to pay off and stuff. So that's not within my budget. But eventually one day, yeah, you would do that, because then, okay, so we're talking 350 micros. So what's 350 divided by 170? Okay, so this, just multiply that by 2. All right, so you're making, over 7 figures, over 7 million a year. And now I was just making up a random figure. If you were making basically $1,000 to $2,000 a day in profit with the static on this, becomes 1,000 to 2,000 on this, which was 400,000 a year, becomes 7 million a year with this, right? So it's just but it takes a while to get there, but it's what you want. Okay, so enough of that. Actually, one last thing is, the only thing that is important to note also is that, any withdrawals you make reduces the account balance once you're funded and actually taking profit. So it's pretty smart to have a real full-time job, or, at least part-time job, to keep you afloat, because you don't want to be making withdrawals from these unless you absolutely have to. And so you want to budget your withdrawals. Let's say you have this account, and let's say you're $50,000 in profit. Well, I would say at max you only want to withdraw a couple G's from it, right? Because you want those profit cushion. So, it is what it is, but you want that profit cushion. You want the account to be big. You don't want to have to withdraw from it. You only want to withdraw exactly what you need to pay your bills, cover your costs and stuff. Everything else you want to keep in the account. So yeah, okay, anyway, enough of that. Let's get into what I'm seeing with trading lately. I don't know what this line's old. I'm gonna get rid of it. Okay, so opening balance, guys. Opening balance is the key to success in trading. I'm just going to say that right now, and I'm going to show you where the opening balance occurs. So I'm not going to tell you the full secret of it. There's more nuance to it than this, but I'm going to give you the light version of opening balance. First 5-minute candle from the open, the 930 candle right here. This is your key to success. Price will return to it. Look at this, okay? I'm just going to say this. Price trades away from it. Now, I was trying to trade a different edge. I traded a different edge than just this, so I had a losing day. But if you trade the edge I'm going to describe here, you actually would have had a winning day. Price trades away. A 5-minute candle closes outside of the range. Wicks do not confirm anything. Wicks just do the damage. Bodies tell the story. Body closes away. Another body closes away. Okay, more candles closing away. So now it's not just one candle closing outside, but there's actually a gap between a candle's high and the low of the 930 candle. Once you have an actual gap right here after this candle, more candles, that indicates a downward bias. So how does that bias play out? You're thinking, well, it trended up all day. It did, but look, comes back into the opening range, boom, goes away from it. People won trade there. Now, this is how the algorithm works. A lot of people who shorted from the opening range they took a partial profit and moved their stop to break even. So what did the algorithm do? It hunted their break even stops again. So only the people with the real balls are still holding. They may take a profit partial, but they won't actually move their stop to break even yet. It's up to you. Now look at this. 415 candle. Now NVIDIA, or it's 420 actually. NVIDIA earnings being anticipated. There's a lot of manipulation going on that day. Price, I don't actually know what happened during this candle. Let's try to discern better. Okay, so what happened? Yeah, that's actually as I suspected. So they baited a lot of people in long. So this candle actually went up first from the open and then went down. So stopped out some short sellers, tripped in some long guys, right? Trapped buyers and scared out sellers. Goes above this. It also went above these, but these are not actually important. What's important is it went above the 930 opening candle's range. Did it close above it? Did it actually close above it? Not even on the 1 minute did it, but the 1 minute's not as important. The 5 minutes really what matters. It went up. Let's say you're in short from here. Boom, you're in a lot of drawdown here, but you can't close the position unless it's closing outside of there. And even if one candle, sometimes it colors outside of the lines, guys. One candle closes outside of this candle, you might have to wait for another one to close outside of it. Yes, that means a bigger loss, but I'm telling you, how many times have you seen, like, in your own strategies, how many times does it seem to color outside the lines? I'm telling you right here, candles will color outside the lines a bit of opening range, but not by a whole lot. Not by a whole lot. If it's going to work, it's going to work. And it might close, one candle might close outside it, but then the next candle might wick up past it and then go down, right? What happened here? Buy, manipulation, boom, trap buyers, flush it, okay? So the short position that you had on from here, or if you moved your stop to break even and then got tagged out, but then you see how it gaps away from it again here? Gosh, shut up. Please shut up. Sorry, getting texts. So the gaps away, boom, you might try to get back in short here. Boom, you go into drawdown, but then look, where does it go? It takes you right to low of day. Take a partial there. You might have taken partials along the way, whatever. I don't know if your thing's here, but basically a short trade did work out today. But you had to wait till 4:20 p.m. for it to happen. So it's very hard to predict when it will happen, but it's a more of where. Where is price going? And it's respecting this 930 opening range candle. All right. So let's go over a previous day. Okay. Why did I have such a big winner? Why did I have such a big winner yesterday? Okay. Again, I'm not going to unveil my big strategy, but I'll tell you like this one, which is the light version of my strategy. Look. Opening range candle, price starts moving up away from it. Comes back into it, boom, moves away, gaps away. These candles' lows are higher than the 930's high, right? Okay, so boom, buy limit, right back at the tie of the 930 candle. You go in long here. And guess whose break-even stops got ran today, by the way? There. People who were holding from yesterday, trading this kind of strategy, which is a very optimal strategy. This is how institutions probably trade. I can't prove it, but it's just based on how price moves. Like, look, it goes down past these break-even stops here. Anyway, takes them out. But I'm not going to focus on how it moves on one day based on the previous day. That gets complicated. But as you can see, the opening range confirmed that it wanted to go up, retraces into the opening range. You buy, go long, boom. Take your profits sometime around here, which is what I did. If you don't believe me, I can show you. If it'll show. Wait, that's my wrong account. Let's go to the actual. Does it? That's awkward. Wait. Oh, it erases them when there's a new day. That's stupid. it erases all your previous orders when there's a new day. Anyway, though, that was basically my I'll show you. I can't show you exactly, but I can show you the P&L from the day here. So, yeah. So, first day didn't trade it. Second day I made 165 in profit. Third day I made $159 profit. That yesterday, by buying within this opening range and holding till the end of the day, taking some partials along the way, made $1,000. Now today I gave, oops, whoa, what am I doing? Oh. Today I gave like 75% of it back, unfortunate, but hey, that's still actually trending upward, right? I'm still up $700, almost $800 in profit on the account. So we'll see how it goes going forward. Yeah. So sorry it doesn't show the actual trades I took, but that's probably best anyway to protect my exact strategy. Okay, let's do one more day. Let's do one more day. This is fun. I like talking about this. Okay, so this one. Didn't work so great. But it kind of did, but it kind of didn't. Actually, no, it did work. And never mind. What am I talking about? It did. It did work. Sorry, I'm just confusing my own strategy with this. Maybe this strategy is better than my strategy, but I know my strategy works, so I'm fine. Okay, so this is the 930 candle. Boom, trading. It's just chopping. It does kind of confirm away from it a bit, but you know, the next candle's green, and that's not a big gap, you know. Okay, so look at this. Once price does trade away from it, you've got green candles closing away. Clearly wants to go up, retraces into the opening range. You have a buy limit here. Guess what? Boom. That's like the trade of the day. Now by the end of the day, it kind of tries to, well, yeah, it goes back to pretty much break even, but you would have taken partials along the way. You could have moved your stop to break even. As you can see, if you did move your stop to break even, you got hunted there, but it didn't really matter because it didn't keep going higher. Now, as you can see, interesting. Chop, chop, chop. Boom, boom. Whatever. Actually, I wonder how this... No, it hasn't revisited that yet. Nope, we're there. I'm going to be surprised if this range gets respected again. I'm going to delete that to be not confusing. So, but yeah, once it really confirmed to a side, not just like one candle, you know, multiple candles making a gap away from the high, the 930 candles high, comes back into it, there's your long trade. Okay, it's pretty simple, right? Like once you see it, it's like kind of hard to unsee it. Like it's clearly what it's doing. Okay, so let's just try it again. And again, this isn't going to be perfect every day, but I'll show you it works pretty damn well. Now this one is going to show you though, sometimes it's like it gets kind of tricky. So look, here's the 930 candle. This is the range of the 930 candle roughly. Boom, it trades up, gaps away. You can tell it wants to move up, right? Come back in, go long. It looks like it's working out, then it starts going against you. As you can see though, look, creates a wick. To me, that looks like it's modifying the opening range. Okay, so let's just say for a second, just humor me. Say that the wick modifies the opening range now. So now you're waiting for a candle to close below that. Okay, then look, you get another wick. Modifies the opening range again. You get another candle, not closing below it, modifying the opening range. Your risk is getting increased, but guess what? If you hold, knowing that the wicks are just modifying the range, guess what? It eventually goes for you. And look, gives you profit right there near the end of the day, goes past high a day. Some people are going to hold overnight. As you can see, though, people that move their stop to break even, guess what? The next day is hunting, still respecting that range in the other ranges that are being created. Anyway, not going to get too into it. Okay, I'm kind of giving away trade secrets here. It's pretty, but look. Does this make sense? Does this seem like it actually works? Okay, so let's go to this one. Same thing. Okay, 9:30 candle. Boom, trades down. Look, gaps away. Multiple candles closing outside with the gap. Their highs are lower than the low of 9:30. What does that indicate to you? Wants to go down. Sell limit right here. Look, no candles closing past the 9:30's candle. They run it up just to try to scare people. Look what it does. Now, also, I wonder if this will be respected in the future. What do you know? It comes back. You see? These ranges are relevant. And look at this. This range actually, in a way, becomes an inversion level during this day. Boom, boom. Okay, so look, I'm giving away some big secrets. Again, I could see myself deleting this video because of how much I'm telling. I'll let you figure out the rest, okay? It's pretty simple. And no, I didn't really learn this from anyone. I mean, I learned about opening range, and I traded it myself, okay? I used my own skills. I used my own skills and capabilities to trade it. You want to see it again? Look at this. Last one, 9:30 candle, opening range. Gaps away from it, boom, you're in long there. And if you're not in long there, you're in long there. Wow, what do you know? Hey, look, it trades back into that opening range one more time. Look, big reaction. Look here, reaction. Boom, boom. Can't even violate it. Look here, boom, again, reaction. Break even stops at this opening range. It's literally how the market works. It's literally that. It's like fucking black and white. No other strategies are going to work. I'm just telling you, okay? So please just keep this shit to yourself. It's fucking really took a lot of... I spent a lot of myself trying to figure this shit out and got super depressed at times, pulling my fucking hair out looking at the market. I'm sure as many of you have. Probably almost killed myself a couple times. I know, I'm sorry if that's too much information, but like, this shit cost me everything to learn this shit. So this isn't, don't take this for fucking granted. This is like, yeah, this is starting to verge on holy grail type of trading stuff. Anyway, of course it's more nuanced than that. You're not always going to win. I trade a more cocky, or just, I trade a different version of this, and I'm not going to tell you what that is. All I'm going to say is my version takes bigger losses, but it also has like bigger wins, like way bigger wins. I won't say it like takes bigger losses. It takes bigger losses in some senses, but also like it takes smaller losses at other times. But it definitely wins more money when it does win. But like all in all, like I'm giving you enough. Like this is all you should need. Like after you've seen this video, you should have everything it needs to be a profitable trader within like a couple months. So, yep. As you can see, these lines are probably previous opening ranges, and they do get respected again later. The shit happens, okay? Just the institutions and the banks or whoever the fuck is trading this is using the same levels like repeatedly. Sometimes they'll get cleared through though. You'll see like price will like chop through it a bunch or something, but like they can always reuse it if they want. But sometimes like you can see that they're clearing all the orders out of a range, so it'll be no longer valid until it gets reestablished as a range again. Yada yada yada. Anyway, how did I know? So how did I know that like it kind of wants to sell off? Like, okay, it can buy up and the market is bullish. And like I told you guys in previous analysis, before I even figured this shit out, I said, look, okay, I said, look, I'd just buy below lows, right? Buy below swing lows, basically. And I said, if it at max would probably want to go below these lows. It did that, but guess what? It turtle souped it's this. So it goes below lows, but that's too obvious. So the institutions, what do? They run it once more, boom, down into this area, which honestly, it doesn't fucking matter. All that they were really doing was they were turtle souping the turtle soup of these lows, right? So there's break-even stop losses there or here or wherever, but like at these lows, it takes those out, it moves away. What does it do then? It knows there's break-even stops here. Turtle soups those, acts like it wants to go up again. See, if they're just constantly trying to fake people out, but you have to have balls and you have to know that this is a long biased asset. So like a lot of my older videos, I wasn't perfectly right about everything, but I told you guys, like I said, watch how long they keep retail shorting. Now you could have made a ton of money to the short side from beginning of August, right? But like again, If you think the entire market's going to crash, look at how quickly they can fucking undo all of this. All right, so that tells you which way the market's weighted. It wants to go up. This shit takes a lot of manipulation. Okay, this does too, but like this shit, like they have, like look how long it takes them to get price down here. Look how quickly they can get price up. Okay, the people who are in the know, who actually move markets and make money off this shit, they know it wants to go up. Okay, it goes up way faster. I mean, okay, look, they say you take the stairs and then there's elevators down. It's not completely, it's really not that true. Okay, it can go fast either way, but like, I'm just telling you, like, remember the bank panic? Look, it grinded down. It did go kind of low, but then, like, look how quickly, in like half the fucking time that it takes to go down, it goes up and it's higher. Okay, same thing as here. We're talking August, so August, September, October. So 3 months it takes to go down, and now in about 1 month it undoes all of that. Okay, so I'm just telling you, the market is bullish and always is bullish in the long run. Okay, anyway, kind of just all over the place, but I hope this shit helps. Please, if this video starts blowing up too much, well, I wouldn't even need to delete it because I already found out that the algorithm will suppress my channel. If you have a profitable strategy, this is the fucking thing, guys. If you post actually like good information on YouTube, YouTube will randomly start to, like, I kind of touched on this type of strategy previously, and those videos were pushing 1,000 views within like a week, and the YouTube was like, half your views are bots, and every time it got towards 1,000 views, 800 views, it would just cut them in half. It was like half your views are bots. I'm like, my ass, dude. Half of them? No way. But anyway, so today, opening range, where is it? Right here, has not been violated to the upside. So despite what this shit is, until it's closing above like the 930 candle, and probably above this candle too, until it's closing above this, I would be suspect about buying. For the short term. If you're a fucking investor, then just buy whenever the fuck you want because it's going to keep going. But if you weren't, like, again, kind of a odd place to be buying, like I already told you, it's a really, like, if you're a long-term investor, again, easiest strategy is be buying below swing lows and shit, and like red day lows and stuff. So like, you would have been buying below this low, you'd be buying below this low, you'd be buying below these lows, you might even buy below this low, right? You would have been definitely buying below this low right here. It didn't go there. Right, you're buying lows. You're buying below lows if you're a long-term investor, knowing that that's the best place to like DCA into a position. You're not buying here. Don't fucking buy here. You're buying there. You're buying when it's crashing. You're holding through drawdown until it comes back. Like you're the one really counting cards because you're just waiting until the count comes back in your favor. Okay. Anyway, I hope this information is like fucking gold because, yep, it's pretty fucking solid. Fuck every other trader strategy. They don't know what the fuck they're talking about. The only good one's Coolamaji. Guess what? Coolamaji, he doesn't day trade, but you know what he does? He trades opening range breakouts. He literally trades based off the same 5-minute candle that I'm trading based off of. But he's just doing it on individual tech stocks that are like mid caps and shit. Mid caps, large caps now because his account's big. So like he's trading Nvidia itself, right? So on a daily chart, where's he fucking buying Nvidia? I don't know if actually, I don't know if his setup's like kind of in play yet. This kind of got away, but he'd be buying this gap up probably right here. So let's go to November 2nd. See, this is Coolamaji is the only one who helped me like figure shit out. Okay, so what he's doing is, okay, 9:30 a.m. He's like buying this breakout, and he's holding, and like he might get stopped out there, but then if it breaks again, guess what? He's holding. So he might just hold it, break even stop, or like a stop at the low of day, or he may wait. As you can see, algorithmically, he should have waited till this candle closed, and it didn't really close much lower than those, so that's not a valid stop out. I don't know if he knows that, so I might be more nuanced than him about understanding candles, but he would be, so he's buying like this shit. He's buying right here, and then if like, even if he got stopped out here, he's watching like He's watching like this high right here. He's going to buy again when it goes there. And then his stop will be here then, right? So he'll make a couple attempts in a day. And then he's going to hold, and he's going to fucking hold, and he's just going to hold, and he's going to hold, and he's going to sell part of it after like a few days. Then he's going to like stop the rest out of it on a close on the daily chart below the 10 moving average, the SMA or EMA, one of them. They're kind of similar. And then he'll close out the rest of the position when it closes below the 20 moving average. So like, he'll buy a gap up, he'll buy a bull flag, that kind of shit. I don't really care about that. I don't care about stocks. I just care about day trading futures. But I'm kind of doing similar shit. I'm not buying high of day breaks though. I'm just I'm buying retracements into the opening range. Well, I'm not doing that. That's what I'm telling you guys is a viable strategy though. I'm doing something slightly different. But I'm still looking at the opening range. Okay. Enough for today. Thanks for watching.